Wednesday. We're here coming in just a little shy of noon today.
The men on two wheels.
Right. And life happening. So we have one of our favorite mortgage lenders with us, Jamie Abbott. Jamie, thank you so much for coming on today.
Thank you so much for having me. I was so excited when I got the invitation.
Well, good deal. And so what we do is we go live every Wednesday with information about real estate and mortgages and just all things that are happening in the real estate world and life and so forth. So we're excited to hear what you have for us. We just always like to leave everybody with information that's going to be helpful in today's real estate market and just adding value to the social media world.
Well, I love it. And I love that you guys are so brave to do this every week and give out great information to your clients. I know it goes without saying that you're exceptional real estate agents and builders. So how fun for me to be able to join you.
Awesome. Thank you.
Yeah, we're glad to have you. So
what's new? What's new?
What does everybody need to know about it? I know the mortgage industry is forever changing. So what's the hot topic today in mortgages?
Okay, great question, and your timing's almost perfect. The hottest topic right now is what's called loan level pricing adjustments. So even over the last couple of years, with interest rates changing so drastically, one decreasing and then two increasing over the last year, what a lot of people don't realize is that the interest rate is so different for everybody because it depends on so many different things. It's going to depend on what type of product you're going to use. If you're going to use a government product or a conventional product or a jumbo product or a rural product, they're all different and they all play by different rules. It's also influenced by your credit score. It's influenced by how much money you're putting down. It's influenced by what type of product it is. Is it a condo? Is it a manufactured home? Is it a stick-built home? All these things influence the rate. So I always laugh when people say, hey, what is my rate going to be? Because actually, here's an example. Here's an example of loan level pricing rate sheet. All these little boxes you see and all these pages are all influenced by what's called loan level pricing adjustments. Well, recently, there was an announcement last month talking about some big changes in those adjustments and how it will influence your buyers. FHFA is the Federal Housing Finance Agency, and it's run by a lady named Sandra Thompson, who was appointed by President Biden. And what she has decided to do in her leadership position is try and change some of these pricing adjustments. Here's where you're going to see them hit. Credit score. We're going to see a little bit of improved pricing for maybe what would be a first-time home buyer or somebody with a little bit lower than average credit score. This is great news for them. We're going to see some adjustments, though, too, with higher credit scores. Typically, in the past, anything above a 740, was just excellent in the mortgage world. Well, now those credit scores are being adjusted from 740 to 760 and 760 to 780 and 780 above. So these are all going to influence what an interest rate looks like. But in addition to that, there is some more pricing adjustments. And one of them is when your debt to income is now over 40%. So typically speaking, in the last couple of years, we've had the ability to lend up to 50% of debt versus income. And what that means is how much your monthly payments are combined with your mortgage versus how much you make each month is the simple calculation of it. Well,
so for basic numbers, if you make $5,000 a month, 50% is going to be $2,500. So you could loan up to $2,500. Would it include your home, car? So
that's exactly right.
Car,
it includes
$2,000 for a month.
You got it. That's exactly right. Well, it used to be 45%, and there was something called the patch that was put into place, and it's been extended over and over. Well, they're not limiting that yet, but what you're going to see is another one of these pricing adjustments, and that are going to be adjusted if that debt to income limit goes above 40%. So we're going to see rates fluctuate even more, really, in the industry. This is all effective in May, but we're going to start to see it early because when people get mortgage loans, They usually are done with direct lenders in-house, but they sell on the secondary market. So you're probably going to see this movement in the next 60 days instituted, so there's time to sell it before May 1st.
Well, I think one of the things that people don't understand about mortgage rates in general, they're always like, so what are the rates doing? You know, and what I don't, it's not that simple. Like, oh, rates are at 5.25 or 5.75 or what, you know, because to exactly what you're saying, well, that depends on how much money you make, how much money you're spending, and what your credit score is, and how much you're buying, you know, and how much you're putting down and how much you're borrowing. So you can say, oh, on average, the rates are 6.25, but yours may be 6.5 because of these adjustments, or yours may be 6. You know,
That's exactly right.
When you see the news say the rates are today are at 6.5, is that just an average?
So it gets a little bit confusing too. So that's a great question, because look, the simplest thing is everybody in the lending business is in it to make money. But so when you see a rate put out, it doesn't necessarily include all the additional costs that go on it. So mortgage-backed securities are 5.5. Okay, that's true, but that's not accurate as to what a mortgage rate would be. So you're going to see adjustments, and you're going to see some adjustments between companies. I would say right out in the open, I am not the least expensive person on the block, meaning my rate is probably going to maybe an 8 higher than a Rocket Mortgage. But a Rocket Mortgage doesn't have the same experience that a local lender is going to have. So I stay pretty transparent with that, because it goes back to the old thing. You're going to get what you pay for in terms of just the entire process, capability to close, and experience. And
well, that's the thing. I'm glad you brought that up. You know, your Rocket Mortgages, your, you know, apply online. We have rates in this, and I think people get sucked into that. Well, this rate looks so much cheaper. Well, that's a generic rate. You may go through the whole process and not even qualify for that rate, or know what your options are. You may spend thousands of extra dollars because you're dealing with a computer and not a person. And this computer is sitting in California and not in Nashville, Tennessee. So I think it's like a smoke and mirrors game, that people feel like, oh, they say I can get a rate of 6% and this person over here is 6.25. Well, then you go through the whole process and you end up spending a lot more money, not getting as good of a loan product because you're dealing with
right. And that's the truth. I love comparison. I love comparison shopping, especially with anybody that's not local, because here's the difference. I know what all the costs are. I know what the title insurance is. I know what the tax rate. I'm not doing a national average. I'm doing, oh, where's your property? Your property is in Nashville, Tennessee. Okay, well, these are real numbers and real estimates. You know, and in addition, there's some other things that you shop for that people don't realize. You know, we represent 6 different mortgage insurance companies. It's hard to beat what that additional mortgage insurance, and what that is that's a cost that a buyer will incur if they're putting less than 20% down. But they can be vastly different between different organizations in the same way.
That can affect your monthly payment by hundreds of dollars.
It absolutely does. And, you know, the same as is everything. Okay, well, here are the insurance companies we work with. Let us go get your bids for you. There are so many things more to influence your monthly payment than just your rate. But here's the tricky part, and this is the part that makes people be skeptical. When you see advertisements for mortgages based solely on rates, and I'm trying to show you all the ways these rates can be influenced, what you're seeing is marketing. And we have brainwashed people into, and unintentionally, and people don't get mortgages every day, but just to think about interest rate, just interest rate. There's so many other influencers in the process, in the experience, and in the reality of really what your mortgage payment might end up being, and what's going to save you money.
Well, and I think that right now we're having conversations because of the rate, because it increased so quickly, and people were going like, oh, you know, we're having conversations about rate buy downs, and I've tried to explain this to people over the years. You know, when I recommend a mortgage lender or an insurance agent or something, like, I don't get anything out of that. I don't get paid. It's illegal. Like, we don't do that. I'm simply connecting you with a professional that I trust, that I know is going to be fair and honest with you, not cost you an excess amount of money. I've had to take vendors off of our preferred list because I knew that you could get the same great service at a less expensive rate. And so I've had to remove vendors over the years, and I've told them, look, you're a great loan officer, like it to death, but your company has gone too far over in the pricing and the value's not there. And I've got these other lenders that are just as good, and their company offers more. So I've had to, and I don't recommend those. I'm looking out for my clients, but I don't get anything out of them using Jamie Abbott other than I know that Jamie's going to be truthful with them, honest with them. She's not going to pre-approve them and not be able to close them unless something crazy happens that's out of your control, that the buyer would do. And that's the thing when, I called 3 different places and their rates are, 0.25% less than hers. And I'm like, you can't call them. I mean, it's not like ordering a pizza, Do you have pepperoni? Okay, thanks. No, do you have pepperoni? That's not what we're doing. And so again, I think that's having a trusted professional. You can trust your agent to know that anybody we connect you with is not because we're getting something out of it. It's because we're trying to help you get the best, be most protected and get the best value overall.
And there is so much confusion in the products and how it really works and where are you saving money, because that's the end game. The end game is finding the most fiscally responsible product that fits your need for the period of time that you need it. Like, I will scream from the top of my office rooftop and say, now is an excellent time to buy. And I know that it's scary because just as quickly as rates went down in 2020, they went back up in 2022. And now I've been doing this a while. I would argue that rates aren't terrible right now.
No, historically so low. I think what the last one we locked in was 5.8 or something. I mean, that's a historically low rate, but you have generations. You have a whole generation that's never seen anything above a 4. So this is like, I'm thinking, and then you've got our parents who they were doing 11 and 12% at one time in their life. But I think people are so hyper focused on it because of marketing, because of the media attacking, and people are a little bit more familiar now with the rate buy down. So I've been trying to tell people for years, when you see this 5% or 2% or 3% or whatever it was that they were advertising, I'm like, and they're like, God, how can they give 3% and everybody else is at 3.5%? I'm like, because they're charging you out the wazoo on the end to buy that rate down to give you the one they promised. So it's ultimately costing you more, and you can do that with any lender.
You can, and that's why, going back to a really big point that you made. Here's my business. My business is very private and confidential because basically someone is telling you something that they do not want everybody to know, and that trust cannot be forgotten, abused, or taken for granted. But you really want the same, because you want your lender to really look at more than just this thing. For example, you're saying, I looked at somebody's loan estimate not too long ago and they had a great rate, and that's why I asked for it. They were also paying almost $14,000 to get that rate. Well, in this current market, and I can go into the economics, but I don't want to bore all of your friends, we're probably in a market that we're going to see another availability to refinance. Now, the economists that study mortgages and the people that I study and follow are probably saying that's going to be probably the middle of the year. They were estimating initially at the end of first quarter, maybe beginning of second. It's got pushed back maybe into that May, June time period. And this is based on historical information. This is numbers from last year dropping off and being replaced with numbers from this year that will show some control over inflation. So we're going to see some improvement. Do you really want to spend that much money out of pocket to get a rate that you're probably going to refinance anyway? That's wasted money. So you want to be careful that if you're looking into that type of buy down, discount point to buy down, like you were saying, Marty, that it's going to put you in a position where you're going to want to stay, because there's no sense in wasting your money. You want to look at all those different options. In the past, you could get a better interest rate for a government loan, but not everybody's government loan, even though their interest rate is low, its payment is going to be lower than a conventional loan. And that's lost because of the great marketing of banks to encourage people to make phone calls based solely on interest rate. And the whole process is so much more personal than that.
Well, and at the end of the day, the interest rates, and some people, they're not going to fluctuate. Apples to apples, from one bank to another, from one loan officer to another. I don't care if you're online, you're Cricket, you're Rocket, you're, Johnny out of pocket. I don't know. But if you're apples to apples with the exact same loan, exact same this, exact same, your mortgage rates are going to be really, really, really close unless somebody's doing some kind of shell game to make them significantly different. Those are just the facts. And so I encourage people to find a loan officer that they trust, that they like, and that they feel like has their best interest at heart. Now, again,
That they can talk to.
yeah, right, that you can talk to. This whole idea of using a computer to buy a house or using a computer to get a loan, which for your average person, your home is your largest asset. So
That's
therefore
right.
your mortgage is going to be it should be the biggest investment that you have, which means it's the biggest loan you will ever take out. Why would you do that with a computer?
Well, and the whole process is a collaboration. The whole process is a collaboration of loving your agents, loving your lender, working with your title company. It takes more than any one person, but you have a team that does nothing but identify the fact that our job is to take care of them. For 30 days, we're best friends. And then what's awesome after that is then we stay friends. So you keep talking and you keep growing and you keep going. So it's just so much more. If it's done right, it is just an exceptional experience all the way around because you're surrounded by exceptional people recognizing that their job is to take care of you.
Absolutely.
Totally agree.
100%.
Jamie, thank you for coming on. Always great information, and appreciate that.
Yeah.
Well, I appreciate you, Rob.
Yeah, we want to add value to our watchers and our followers, and you've been a great addition to that. We love working with you guys, and look to having you on again. But if you guys are looking to buy or sell, give us a shout. Give Jamie a shout. She can definitely take care of you. We can take care of you in this crazy real estate market that's always changing, but there's always an opportunity for somebody, no matter what the market is.
That's it. All right,
Thank
we'll
you
see
guys
next
so much.
week.